All financial markets have a bull season and a bear season, which depend upon a variety of factors. Crypto markets also alternate between markets moving up and markets moving down. Traders can secure profits when the prices of cryptocurrency markets are going up. But what about in a downtrend? My name is Josh, and today we look at how to recognize a bearish trend or downtrend in cryptocurrency markets, and the strategies for trading in a downtrending market. Analyzing upcoming trends in cryptocurrency prices is critical for any trader. The analysis assists in making careful trading decisions on whether to buy, sell, or hold crypto assets. Moreover, by analyzing trends, a trader can also identify strategies to trade in bearish markets. The main trends in cryptocurrency markets can be analyzed through fundamental and technical analysis. Fundamental analysis involves analyzing the price of cryptocurrency tokens through the project's fundamentals, including its team, roadmap, performance, etc. Technical analysis involves examining the price trends through a set of technical indicators based on charts, patterns, trading volume, etc. While it is impossible to completely predict the direction of markets in near future, there are technical tools that can help. These indicators act as instruments to gauge bullish or bearish market trends. Day traders use moving averages as indicators before choosing to enter a trade. This tool involves tracking prices of a cryptocurrency asset over a specific time period. Moving averages takes into account precious price actions over a time duration that has been specified by the trader. For instance, a 10-year period moving average looks at the closing price of the last 10 candles. If the trader looks at the daily chart, then this is the last 10 days. If he looks at the hourly chart, then this is the last 10 hours. Therefore, different traders use different moving averages lengths and on different charts. Moving average crossovers are one of the more popular signals that are used by traders. To predict trends, traders use at least two moving averages. The traders will identify a bullish trend when the short-term MA crosses over the long-term MA, and they will identify a bearish trend when the short-term moving average crosses over the long-term moving average. A setup that tends to work in the crypto markets is the crossover of 10 and 50 EMA. In Cryptohopper, you can easily automate this process by using triggers. To create a trigger, click on Config in the left side menu and go to Triggers. Then on the top left, you will find a green button saying New. Click on it. Let's name it EMA Trend Bearish. We have selected Binance as our exchange and Bitcoin to USDT as our market. You can of course select any exchange and any market you like. Let's select the EMA as our indicator and the candle size of 1 day. Our trigger point in this case is when the EMA signals a sell. We have set the EMA short periods to 10 and the long one to 20. For the action, we have chosen Load Template and picked our bearish strategy. Afterwards, you can hit save and we are done. You should be wondering by now, what tools can you use to make a profit during a bearish market? The first tool you could use is shorting. Shorting involves selling a cryptocurrency asset before you actually own it, and buying it later on at a lower price as the market declines. With shorting, you make a profit when the price of an asset is falling down. Interested about more ways to make profit during a bearish market? In the description, I've put an article where all of this is written out for you. Don't forget to leave a like on the video and click the subscribe button. And as always, happy hopping.